Good afternoon, everyone joining us in our webinar today, Reimagining Digital Banking, the Implications Post-Pandemic. Before we begin, we'd like to go through a few housekeeping items. At the bottom of your screen, there are multiple widgets for you to use. All are movable, and feel free to resize them as you wish to get the best out of your screen space. If you have any questions during the webcast, you can submit them using the Q&A widget. We will try our best to answer all questions during the session, but if we run out of time, we will answer them via email. We will be using interactive polling during the session, so we encourage you to participate. Additional materials are available in the resources, which you might find useful. During the session, if you have any technical difficulty, please refresh your page. We value your feedback, so please complete the pop-up survey at the end. I'd like to now hand over to our moderator, Aravind Narayan, Performance Director at Refinitiv. Aravind, over to you.
Thanks, Imran. Hello and welcome to today's webinar, everyone. Reimagining Digital Banking, the Implications Post-Pandemic. We've got a very exciting and conversant panel for you today to discuss this hot topic, which I'm sure is near and dear to many of us. Now, connected devices are growing globally. Global financial systems are gearing up for the digital era, but at the same time, rapidly growing threats that develop with this is always a challenge. Now, combine that with the outbreak of COVID, there is significant crisis when it comes to health, wealth, and behavior, and so on. By no means we haven't seen it all. Amidst all these pandemics and the threats lie amazing opportunities, and what we're going to do today is going to dig into all those topics. So without further ado, I would like to introduce our excellent panel of speakers. Shana Krishnan, who is a policy analyst from FATF, Peacock, who is the Chief Risk Officer of a challenger bank, Think Money, and last but not least, James Mirfin, who is the Global Head of Digital Identity and Financial Crime, Refinitiv. And as Imran mentioned earlier, this webinar will be moderated by me, Aravind Narayan, Performance Director at Refinitiv Risk. For those of you just joining us, welcome. We've just completed the introductions. So let's start with some stats. Back in 2010, about 6 out of 10 transactions involved cash. Fast forward to now, 6 out of 10 transactions involve debit card payments, and with about 20% contactless payments. There was a survey conducted in the US, but it kind of reflects a global outlook as well. And this talks about the behavioral changes that happened as part of this pandemic. So some of the interesting results that came out was about 45% said they would interact with the banks from now on digitally, using mobile payments, e-wallets, and for apps and everything. About 40% said they will only shop online from now on. And to add another perspective, about 33% of the people said they will only order takeaways and not go into restaurants. Now, this kind of changes the whole behavioral aspect of people. So the trust and loyalty has got new definitions now in the digital world. It'll be measured based on how sympathetic you are as a bank towards such pandemics, and it can positively impact the humanity, and also how quick you as a bank or a business can innovate to make it easy for your customers. Now, this growing emphasis on social distancing and the push for digital banking, etc., has put the spotlight on the players who are lagging behind in this space. So, I mean, my question to you, Steve, in your experience, what have you seen in terms of how a bank can become digital, and what are the biggest challenges that you see in becoming digital?
Good afternoon, everybody, and thanks for the question. It's very interesting sort of times that we're in, really. I think in terms of the whole flow to being digital, it's very much sort of happened over the last sort of 5-10 years. It's been very much a sort of characteristic of the last decade. And it sort of plays with where consumers are generally in terms of wanting to consume their products, be they financial services or other products, almost immediately from a digital bank perspective or a challenger bank perspective, what we've seen is that there's been a real sort of focus on the customer experience, and we're no different at Think. You want to make it easy, digestible, understandable for the consumer to be able to open an account fairly quickly. And also from the banking side, you want to make sure you've got the sufficient rigor, checks and balances in there to be able to conduct that business with the customer. So, ID and V checks along the way. So I think there's been a real sort of movement, in my opinion, in terms of how banks do that, how many clicks is become sort of one of the sort of key performance indicators for a number of new banks for helping customers open accounts. And, anything sub 25 is seen as excellent. And I also think, in terms of speed, you can open a bank account now very much, in minutes, pretty much, compared to probably 10 years ago. It was weeks, and still in some cases, it still is weeks with some of the more mature banks. I think more broadly in terms of challenges in the sort of last sort of 15, 16, 17 weeks or so, in some ways account opening and all that stuff, that hasn't really changed. That's all been there. I think the bigger challenge is the accessibility now with a number of players on the market, who aren't necessarily full banks. They can be payment service providers, and it almost provides a means to the criminal fraternity to get access to the financial system, and they will target these new entrants who are trying to grow their account base quite rapidly and to get to scale. So again, they're looking for the frailties in those organisations to make sure that have they got gaps in their controls and their fraud checks. So I think what's interesting, you've seen some organisations who've struggled with that, but you've seen a lot of organisations who have held up very resiliently. I think another thing as well, just picking up finally on the point you made about loyalty, that there is more freedom of choice out there now, and it's easy to move between different providers. And, customers, are not as forgiving as they were, and that probably goes back to the financial crisis as much as anything else of sort of 10, 12 years ago. So they're very keen to sort of bear with you, get the services they want, but if they can't get the service they want and it's not what they expect, they will move and they will vote with their feet to other providers, and it's very easy to do. So the whole digital landscape has made it very, very easy for consumers and for organisations, for different reasons.
Great. Thanks, Steve. That was very insightful, especially the point you mentioned about the balancing act of the customer experience and the checks and controls that you need to have in place to make sure that you don't onboard a wrong person or do business with the wrong individual, especially from a digital banking perspective. I mean, doing digital obviously comes with its pitfalls, but think about that at a pace of a rocket ship, especially when it comes to something like a pandemic that is forcing you to do so. There's a lot of challenges that you could face, and that is what fraudsters are looking to kind of exploit. And especially during this pandemic, we did see a lot of scams and emails and other threats that came through in terms of hackers creating malicious websites and that spoof legitimate public health resources and supplies of masks online and investment opportunities, and even there's many out there, and even account takeover or ransomware. Now, COVID aside, obviously there is always a balance that you need to look at from digital trust, security, cyber threats, etc. So, to you, Shana, from a policy lens, if you look at this, how do you see the evolution of digital ID, which in turn supports the digital onboarding, from a policy lens when it comes to these forces such as digital trust, security, cyber threats, etc.?
Thanks, Aravind, and good morning, good afternoon, good evening to everyone out there listening to the webinar. It's a very relevant question, and it's something that the FATF has been often asked about. We see and we agree that there's an increasing number of transactions occurring online, and so that there is also an increasing demand for people to be able to kind of assert and prove who they are in the online environment. And as you mentioned, in the post kind of COVID context, we did sort of a survey of our members, and we released a paper on risks and responses. And, it was very clear to see that there was a surge in cybercrime and fraud, and that this kind of has a particular impact on digital banking and some of the innovations in this space. So I'm just going to bring us back to the FATF's digital ID guidance, which I think provides a good framework when we're trying to look at the risks associated with what we call non-face-to-face customer due diligence. And at the outset, I really want to emphasize that digital ID systems are not necessarily more vulnerable than the traditional idea of going into a bank branch to open an account. Identity fraud also exists in face-to-face situations, and we need to move away from this idea that non-face-to-face onboarding is always high risk and less reliable. And one of the key messages from the guidance really is that trustworthy digital IDs, which use good risk mitigation measures, can actually be standard or even lower risk in some situations. And I'm going to just take you through how we looked at risks in the digital ID guidance, because we looked at it in terms of the two fundamental stages of creating digital ID. And the first stage is the identity proofing and enrollment stage. And this is basically where the identity service providers collect, validate, and verify identity evidence and information about a person. So the kinds of things that might happen at this stage is, checking that the documents that somebody provides, digitally or otherwise, are real, using software to check the physical security features are present, to check expiration dates, and then verifying whether that document actually belongs to the person that, it's asserting that identity. So this is also somewhere where we can see things like biometric solutions being used, like facial recognition, or things that we often see like liveness detection to actually link the individual to the evidence that's actually being provided. And the key kind of risks we talk about in the guidance at this identity proofing stage are where potentially a criminal steals a real identity, an identity that exists in real life, and then impersonates it for his or her own use. And then the key risk that we see also is, criminals using various identities which are stolen from the internet and creating what we call a synthetic identity, which is created by mashing together a range of real and fake information. And during our consultation with digital ID experts, some of the experts in the US in particular mentioned that synthetic identities were posing the greatest challenge in the US at the identity proofing kind of stage. So once you've done identity proofing and enrollment and you've issued credentials to a person, that brings us to the second step of authentication. And that's basically where you check that the person using the credentials is actually the person that you've identity proofed at the first stage. And at this stage, there are two kind of key areas of risk. And that's one, where the credentials have kind of wittingly or knowingly been compromised. And this can be the kind of example we see of individuals who kind of agree to sell or to give their digital ID credentials to criminal organizations, and then the criminals then use those accounts to kind of move their funds around. And it basically turns those individuals and those accounts into kind of digital mules for the organization. And then the second situation, which is kind of also very common and something that we hear about all the time, is the unwitting or unknowing compromise of people's credentials. So people in the course of just undertaking online activities are subject to cyber attacks. And we talk a lot about the different types of attacks like phishing or man-in-the-middle attacks, credential stuffing. And this basically is criminals hijacking the user's credentials and now having access to these identities to basically launder their funds. So the guidance talks about lots of different digital ID assurance frameworks and standards, like the NIST in the US or EIDAS in Europe. And those kind of frameworks actually provide a framework for understanding these risks and possible mitigation measures. And I won't go into it now because I've talked a lot already, but they also address wider issues around data security and protection, which are not directly related to anti-money laundering and terrorist financing, but do have an important role in guarding against identity theft and impact on the overall trust people can put in these systems.
Great. Thanks, Shana. This is the kind of step-by-step guidance I'm sure people who are attending this webinar also would be keen to understand, and also the threats, and especially from a policymaker like you, like FATF. This is great. And now I just would like to just turn attention to the audience, and I would like to just make this webinar a bit more interactive. So here you go. We just want to push a poll out, and would love to hear your thoughts on this. I would give it an. There you go. The poll is in there now. Would you bank digitally post-COVID? Yes, no, not sure. And this obviously is like trying to reduce your visits to branches unless necessary, all of that. So with that in mind, I would like you guys to just vote, and we'll stop the poll in a minute. We'll reveal the results. Great. Love to hear that. And I'm hoping by the end of this presentation that 7.1% is going to be more going towards a yes. That's what we are trying to look at as well. And this is great to see about 93% going to go towards that side of the spectrum. Now, moving on, I'm just going to talk a bit about while we are talking about threats and frauds, etc. So let's talk about a few things. When we bank digitally, when your data goes, it becomes digital, all we fear is if our data is safe. Let's take an example, UK. Let's say I think about 1 in 10 Brits were scammed during this pandemic. Out of this, about 25% were targeted by the digital fraud between March and May. Now, in 2019, we saw UK had the record number of data breaches. So I say that digital is the way forward. On the other end of the spectrum, there's a whole demographic of people unsure about the privacy demonstrated by such technology. So being a data-centric company, Refinitiv has definitely given this much thought. And so, James, question to you: how would we balance these two forces, like data privacy and digital fraud, and how do we give people that assurance that to put their data out there, which can be digitally secure?
It's a great question, Aravind, and I think it links to some of the points that Shana made at the end of her comments just now. But we've spent a lot of time focused on privacy and financial crime more broadly, not just fraud, and particularly AML. Clearly, with the introduction of GDPR and other privacy regulations, it's really introduced a lot of complexity into this space. We've seen well-intentioned privacy rules to protect consumers and to protect their personal information. They're not always designed and implemented in a way which allows well-intentioned financial institutions to use data in a way that identifies individuals or even actually helps to prevent financial crime. I mean, if you step back from it and look at it, it's really quite a challenge, particularly heightened with COVID-19, where we've seen, the world and consumer behavior tipped on its head. You've suddenly got hundreds of millions of people working from home. They're accessing networks from unseen devices previously. They're typically accessing from unsecured networks. And add to that the fact you've got people under incredible stress, whether it's around jobs or homeschooling, health. It's like a nirvana for criminals and fraudsters. You touched on some of the scams that have been seen and the sort of types of fraud. I was on another webinar recently with a senior representative from FinCEN here in the US, and they shared that I think in the first 2 months of the pandemic and the sort of quarantine measures, they'd had over 13,000 filings related to specific COVID-19 scams. And that ran the gamut of imposter fraud, supplier fraud, which you talked about, I think, of medical scams, insider trading, charities fraud, investor scams that were focused on COVID. even fraudulent employer fraud, where they were posing as employers, going after vulnerable people that had lost jobs and taking their information and compromising bank accounts. So, clearly the fraud area is ramping up significantly. It's an area which I think regulators are focusing on more. I think this week there was an article talking about the FCA sending a Dear CEO letter to payment services firms and talking about some of their concerns, which included financial crime. And it was talking about specifically AML risk assessments, customer risk assessments, and due diligence. And I think, in a normal operating environment, that's a challenge. But I think given what we've got going on now, that's really been amplified. And the needs of consumers has changed. We're not going into bank branches. We need to engage digitally with our financial institutions, and that's a challenge. So for me, I should point out there's clearly been lots of guidance published around these kind of frauds. I mean, FATF's published papers, the FBI, the FCA, you've got Europol, OECD. There's a lot of information out there. It's quite hard to go through. But for me, there's kind of three levels of what we need to do to balance the conversation around privacy and fraud. At an industry level, it's really important that we talk about this more, and we push to make sure that legislation is put in place in the right way, and that there are legitimate interest carve-outs or public interest carve-outs around that legislation. And that's one of the reasons we launched our Coalition for Financial Crime with WEF and Europol. I think at an institutional level, it's really important to look at how do you go about getting consumer consent to use their data in the right way. I've certainly started to see banks linking consent to access to services, i.e. if you don't give us access to the information on your mobile device, we won't let you initiate payments over a certain threshold or access more sophisticated services. And I think we'll see more of those kind of explicit trade-offs. I think it's important, obviously, for banks to look at information security and where you're hosting consumer data, particularly in an environment where a lot of your employees are remote. That's clearly key. And then I think if I take it back to the consumer level and the question you just asked in the poll, we have to be comfortable to grant our financial services providers access to our data to protect us. We trust them with our money. I think we really have to trust them with our data as well.
Great. Thanks, James. That's some of the good points you touched there on there was consumer behavior changes and how that's fueling the innovation, and this behavioral change is also kind of bringing in the whole trust aspect, and I think and I think the fear of that whether the data is going to be safe or not can be assured or reassured by the banks themselves and the providers if they prove to the customer that we have the right amount of security controls in place. I think people would love this innovation because this is the way forward from what we can see and what we have heard. So, I mean, that being said, I mean, one of the things that he touched on was about the standards being published, and we always, even the digital ID providers or banks or everyone wants to turn towards, and data providers, they all want to turn towards someone who they can trust to get or to seek such advice and guidance in such situations and recommendations on how to proceed in the digital-only world. And I'm sure FATF has always been a body that's super agile and always given that guidance at the right time. And the fact that they published the paper literally I think it was the 24th of March or something this year, and it was like great timing-wise, and it was like literally at the brink of this major pandemic and lockdown. So, Shana, what are your recommendations made for the financial institution when it comes to digital identity and verification during onboarding? Love to hear your thoughts.
Great. I mean, and that was kind of the main aim of the guidance that we put out in March. And I guess before I start, I'll just mention that this guidance is it's very specific in the sense that we're talking about the use of digital ID systems for identification and verification for CDD purposes, and that's basically the focus of the guidance. And there are questions more broadly that we can sort of talk about on the webinar, but weren't necessarily kind of addressed in the guidance. But The key thing, I think, if there's one thing I can impress on everybody is it's really important to know what you're going to be using and to take the time to really educate yourself on that technology, on the risks and how the technology can mitigate those risks. And a good way to do that is to understand the basic components of the digital ID system. I mentioned them a little bit earlier. And also to understand the digital ID assurance frameworks. I also explained a few of those later, but there are summaries in the digital ID guidance on the FATF website if you want to take a look. And I think just understanding that as a first step will give you a good idea, a starting point of the kinds of questions you really need to ask before implementing these sorts of solutions. And explainability is really, really important here. In order to get buy-in from your management and ultimately from supervisors that these systems work, you need to be able to explain it in simple language. And to help with this, the guidance kind of provides a decision framework for using digital ID for customer identification and verification. And I just want to note as well that the FATF is remaining very technologically neutral here. We're not recommending any one type of technology or solution or model. What we try to do is kind of give you a way to think about these issues in terms of implementing them. So I'll put the model up on the screen in a second, but I just want to say, so there are two kind of overarching considerations or things you need to figure out according to this guidance. The first is, what is the level of confidence that you have that the digital ID is correctly identifying a person? And then second, based on that level of confidence, do you think that the digital ID is appropriate to mitigate the money laundering and terrorist financing risks present? So I'm just going to put up the decision-making process, and I think you can see it now on the screen. Basically, we've broken it down into three main questions, keeping in mind that there are different national identity frameworks in place, and so the government can also have a role in making some of these determinations. So the first question is really about dealing with a situation where there is a government-provided or government-backed digital ID system in place, which is approved for use in customer due diligence. And, the cases that we see this happen is it's mostly likely kind of one main form of solution in the jurisdiction, like a national EID. And in this case, the government kind of answers for the private sector those two kind of key considerations I mentioned by saying that there is sort of a strong level of confidence in the ID and that it is appropriate for use in CDD. And so that means that you can use that solution, but you may still need to supplement this with further requirements of CDD, such as understanding the nature of the business relationship. That might not be provided by the EID solution, and you might need to still kind of collect further information. But let's say that there isn't a government-provided solution or a backed system. You need to move on to question 2, and that's where you ask yourself about the reliability of the system. And this isn't a yes or no question, a yes or no answer. It's sort of all shades of gray. And as I mentioned before, there are these assurance frameworks and standards that kind of grade the mitigation measures that are in place and provide a rating. It could be sort of a low level of assurance, a substantial level of assurance, or a high level of assurance that the person is who they claim to be. And there can be separate ratings for identity proofing, the first stage I talked about before, and for authentication, or they can be sort of just an overall rating. And this can kind of be helpful for the private sector in kind of assessing how reliable they think the digital ID system is. And the government, again, can play a role here. They can either have a certification type system in place to do this themselves, or they can say that the private sector can rely on another body or organization to certify these solutions. And in the case that the government doesn't play this role, we ask that the private sector itself obtains an assessment or assesses against some assurance frameworks how reliable the digital ID solution is. So once you know that, you can go on to the third question, which is the level of reliability appropriate considering the money laundering and terrorist financing risks that you're trying to mitigate? And I'm going to give you a very oversimplified example here to kind of demonstrate this. And I'm going to pick on James to be my other example. But let's say James and I are trying to open an account. And there is one digital ID solution in place, but it can provide you it can identify people at different levels of assurance. So, for example, let's take James, and let's say James has a number of verifiable identity documents. The digital ID service provider has collected biometrics to link him to that identity evidence, and James has 10 years of banking history at another core financial institution. And so the digital ID service provider has a high level of confidence that James is who he says he is. On the other hand, you have Shana, you have me, and I've just arrived in the country. I have some identity evidence, but it's not completely verifiable because it's from a foreign authority. I don't have a fixed address. I don't have a banking history in the jurisdiction. So maybe the digital ID service provider decides that there's a lower level of assurance that I am who I claim to be. When you're dealing with James, you might be able to offer him a bank account with full functionality because you have a high level of confidence that he is who he is and you're kind of confident about the risks that he presents. When you're dealing with me, on the other hand, you might offer to start with a more basic account with mitigation measures in place like transaction limits, etc., until you kind of learn more about me, how I interact, and get a greater level of confidence about who I am. You might not be able to provide me with greater account functionality. That's kind of the tiered CDD approach that we talk about. And so this, in general, kind of explains the risk-based approach that we're trying to encourage when we're using digital ID. And again, I just highlight, so the two main things are basically to understand the level of confidence or the reliability you have in the ID, and then to match that to the money laundering risks that you see and need to mitigate.
Great. Thank you, Shana. That was very, very informative and a very step-by-step approach and recommendation. Thanks for that. And this is one of the reasons why I really love reading the guide as well, and a lot more other reasons as well. But this is definitely one of the key things that caught my eye in terms of the process-driven, step-by-step guidance, and was very, very nice. And so, I mean, bringing it back to some of the points about the digital ID providers, etc. So, James, having experienced, trialed various providers in the space, I mean, what are your thoughts on where digital onboarding in general is heading, and where is it now? Where is it heading, and what's the future? What do you see as the near-term and the longer-term future of digital onboarding?
Sure. So I think, thankfully, my thoughts seem to tally with what people on the webinar think would be 93%, digital banking. But I think there's clearly an inevitability to the shift to digital now, particularly with what we're seeing. There was some stats recently. I think BCG conducted a survey looking at behavior around consumers, and they found, I think, nearly 50% of millennials and Gen Z had enrolled in mobile or online banking for the first time since the pandemic started, which I found quite surprising. I thought a lot of those would have already been enrolled. There was also a finding that 1 in 4 customers plan to stop visiting branches altogether once the pandemic's over, which again is a huge number. And I think even prior to the pandemic, the nature of financial crime was changing. We saw huge increases in identity-related fraud last year. I think that was up nearly 13% to almost $17 billion. And, payments fraud's increasing. So I think the combination of what's been happening from a fraud perspective and then what's happening now with the pandemic is going to make this inevitable. I mean, some of the things that I think we'll see, clearly there's going to be a heightened focus on regulators looking at availability of services and the way that banks are deploying digital technologies. I think you saw this week one of the UK challenger banks was down for a period of time. So I think that could potentially raise the bar around expectations of what's needed. I think you're also going to see heightened disruption from some of the incumbents. I mean, I think there was already a move towards digital for a lot of the larger incumbent players, but clearly COVID-19 is forcing banks to relook at that. I think the other factor that will weigh in on that, over the last few days, we've started to see some of the banks announcing quarterly results, and clearly there's been a significant reduction already in profits and quite significant increases in their reserves for bad debts and provisions, which I think, again, that typically sees them look then at cost-saving and efficiency drives, and digital can certainly help with that. We are certainly seeing sort of more established players looking at how quickly they can move towards more digital onboarding and sort of authentication systems for customers. But that's not always easy, particularly when you're looking at banks that have got legacy platforms. They're running on mainframes. They've got multi-year technology transformation programs. So I think we're going to see more and more of them looking at what they can do to offer digital customer experiences and onboarding, but potentially disconnecting that from some of their legacy platforms to move quicker. It's very clear, though, that in the way a lot of organizations are structured today, it takes bringing together huge cross-functional teams. I think one of the things that came through very clearly in the FATF paper that Shana was just talking about, which I thought was brilliant, was the need for institutions to start looking more closely at bringing together things like AML, fraud, cybersecurity, and things that potentially, and authentication, and things that potentially have been a bit disconnected historically. So I think we'll see those. So, if I summarize it, I think there's really going to be 4 pronounced changes that we'll see as a result of the pandemic. I think one is going to be a significant shift towards digital consumer experiences in banking. I think when you've had digital as an option, not as a requirement, then that doesn't necessarily mean that it gets the focus that I think it will now. I do think moving to digital experiences in banking is probably one of the most complex digital engagement models to solve for. And this goes back to something Steve mentioned, which was sort of the right level of friction and the right level of rigor around that. So that would be the first one. I think we're also going to see a move in banking from what's really being looked at as a digital servicing channel to a digital engagement channel. And what I mean by that is if you've built your digital products to enable service, when you don't have customers coming into branches, you need to start now thinking about that as a true engagement channel, which means selling other products, customer interaction, and that's a big shift for a lot of financial institutions. I think the third change I think we'll see is a tighter coupling of teams and technologies which are used to deliver those digital products and services. And so I think we'll see more and more institutions looking at how do they bring their AML teams, their fraud teams, their cyber teams, the security teams, and those that have been looking at identity access management and authentication. I think we're going to see those come together more closely, and that the technologies that they look at across those functions are going to come together more closely as well. And I think the last thing that I would call out is that we're going to see a faster adoption of some of the new enabling technology. You can't do the first 2 things that I've talked about in terms of deepening your digital engagement and transforming your models without using new technology. The tech's moving very quickly, whether you look at cloud computing power, the use of AI and ML, or availability of real-time data. And actually, even in the more traditional AML space, where providers like ourselves are revamping the way that we make data available and trusted data available at the right time, which allows you to reinvent the customer journey and customer lifecycle. I think it's quite a significant shift for a lot of financial institutions. So I think we've got an inevitability, a market force change, and we're going to see this move more quickly than perhaps we have before. And the other good news is I think it's very clear that regulators are open to new models for digital onboarding. And I think the FATF paper helped to sort of set a framework which regulators are looking at and implementing their guidance around. Consumers are crying out for this, and the technology is available. So I think, and going back to one of the first points Steve made, the good news is that if you deploy this well, it can give you a more rigorous approach to the way that you look at the risk of your customers and the way that you onboard them and think about financial crime, but it can also make it a better consumer experience. So it can be a win-win, which I think is very encouraging.
Great. Thanks, James. I mean, you raised some of the good points there in terms of obviously digitally enabling customers is one thing, and then AML controls is another. But these have to work hand in hand and enable customer experience and be compliant at the same time. And you want to give enough friction for them to not drop off from onboarding, but enough to actually catch the bad actors. And again, the earlier point where Shana mentioned the risk-based approach kind of plays a very crucial role here. And now some of the things I want to mention is in 2019, we had a record year of fines in the UK totaling a whopping $388 million. And then So there are a lot of fines because of lack of controls, etc. So from a think money perspective, and I know, Steve, that you guys call yourself a jam jar bank, which is pretty cool. And I'm sure you guys have a pretty robust AML controls and onboarding journey. So my question to you is, as a chief risk officer, what keeps you up at night? And especially a bank being the epicenter of a convergence of the three forces, which is the data, tech, and regulation.
Really good question. James and Shana have both made some really excellent points, and really a lot of the stuff, one of the benefits of being a chief risk officer, I suppose, is that I get to focus on all the risks rather than just one, say, just to do with onboarding and AML. So, which is can be a curse sometimes. I think, as I say, James and Shana made some excellent points in terms of the bits they've talked about. There's a lot going on in terms of how the whole financial services ecosystem, has changed and is changing, and to pick up on some of the points made, we now have a situation where we've got lots of people working from home. That's likely to continue for the foreseeable future, and probably the way of working now is probably going to change forever. So with a lot of firms either having wholly, working at home, or a hybrid model of people working at home, and then you sort of get into the risks of thinking about, well, as we touched on there, some of the cyber points around, well, how can criminals hack or access firms' data? And when you've got the Internet of Things, with fridges with the Internet connectivity on, it just adds another level of complexity that people who do my job, are having to now grapple with, which they've never had to grapple with before in terms of new concepts. The other side of it as well is, and again, picking up on some of the sort of journey that the banking is going on at large, and largely led by a lot of the challenger banks, is it's almost starting to replicate a lot of what's existed by firms such as Amazon, to use them as an example, where people can go on their website or on their app and they can order something straight away, and it's literally a couple of clicks and it's done and delivered within 24 hours. And people want to consume all their products like that, including their banking products. So going back to the points I made right at the very start, consumers want a level of friction because they want to feel like it's robust and rigorous and they're dealing with a strong organisation, but not to the point where it feels like a barrier. And so there's a real balance between trying to have a great customer experience from the moment you walk in the virtual door, to how you have your interaction ongoing with that firm, to feeling like you're dealing with a well-protected firm. To pick up on a point that James, I think, made around some of the Dear CEO letters that that have been going around recently, and the changes to regulation. The FCA in particular is recognising, and has recognised for a number of years, that there aren't just banks out there now providing services. There are other organisations that provide what are pretty much banking services. Think Money being one of them in terms of being a payment service provider, and if you take Think Money as an example, we've got a very, very strong social inclusion agenda where we want to make banking accessible to everybody, and particularly those who have poor credit ratings or struggle to get a bank account. So again, we've got to work with the rules and the regulations that are there, and they're very clear, but also create an environment where we can sort of think about how we apply those rules and regulations in terms of how we use data, how we use tech providers such as firms like Onfido, who can go and verify identity documents, be the national ID cards, passports, driving license, and also do things like anti-impersonation checks. So, the use of technology, but being able technology to almost be a conduit to get into using data, in terms of to identify and verify customers, and also understand more about, are these who they actually are, and prevent fraudsters getting into the organisation, are all front of mind. And I guess the biggest challenge that vexes me or faces me on a day-to-day basis, and it's not particularly a financial crime one or a cyber one, is that we're in a data age now, and it's actually understanding how data can be used and what that means, consent, What are the false positives? And it's such a minefield, as I say, that the role is very different, and it's just a very, very challenging sort of environment to sort of think of what the future might hold, because it moves so quickly. And to sort of build on some of the points made before, cyber's a great example of that. The defences that firms put in place are reactive to what's happened before. That they're very rarely sort of preemptive in terms of what could happen, because you're always trying to play catch up a little bit with the cyber criminals. So they're the things that keep me awake, so to speak, in terms of thinking about how do we react and how do we prevent what could be coming, and thinking about the new risks and threats that changing business models and approaches are driving all firms, regardless of whether they're financial services or not, and what they're facing.
Thank you, Steve. That was this was pretty good, and I can see a lot of factors that could keep you up at night in that role of yours. But I can definitely see that you're executing it awesomely well. So great. Doing digital is a great way to excite customers, and in the UK alone, we have seen about, I think, 76% smartphone users. So going mobile first is definitely a step forward and a great first step to many firms in this space to going digital. But digital financial services enabled by these digital IDs have the potential to also bring another context, which is financial inclusion, which again, Steve, you touched on, and to bring these services to the unbanked who have been locked out of financial ecosystem. How can we support the access to economic growth, education, contribute to reduction of inequality, etc. So I'm sure in emerging economies and everything, this could be a challenge. And I read that part in the digital ID guide by FATF a couple of times over and over again, because this is quite exciting. And I also kind of attended a webinar recently where we talked about financial inclusion and open banking. So this is quite a very personal topic for me as well. So I would love to hear your thoughts, Shana. How is the digital ID helping with financial inclusion from your standpoint?
Thanks, Aravind. Great question. And, I share your excitement about that part of the guidance. I think there's been a lot of enthusiasm about the opportunities that digital ID presents for including people that have been for a very long time excluded from accessing traditional financial services. And, we believe strongly, we worked closely with the World Bank and the UNHCR, the Refugee Agency, that not having a birth certificate or some other form of national ID shouldn't be a barrier to accessing financial services. And especially in this kind of post-COVID-19 context, there is sort of also a strong focus on inclusive growth and how can we kind of take everybody, along in growing our economies after this crisis. So, and I just want to kind of highlight, and this is what we've highlighted in previous financial inclusion guidance by the FATF, the overall aim of the system is to bring more people into the regulated financial sector so we can expand the reach of the anti-money laundering measures that we're asking countries and institutions to put in place. And we strongly believe that financial inclusion and anti-money laundering are not competing goals, that they're completely mutually reinforcing. And so that's just something that we think we need to think about. And the guidance highlights a couple of examples of ways we can do this. The first is using new technologies to be more flexible and forward-leaning in establishing the identity requirements in the first place. So some of the technical standards actually provide quite a lot of flexibility. And we see, for example, in the US technical standards, the NIST, but also in systems like India's Aadhaar, digital ID, they allow for things like trusted referees, such as village heads or local government authorities, to vouch for the applicant as a form of identity evidence where they might be missing other common sorts of documentation. In the case of India, this is in addition to biometrics that are collected. And it basically means that there's more than one path to establishing who you are and establishing your identity. And I think that's really important for inclusiveness. And there are probably more things we can think about here. Often I mention the example of Shana, the person who had just moved to a new country and doesn't necessarily have a permanent address. Are there different ways in which we can, meet these requirements? And can we be more flexible and forward-thinking in doing that? The other key thing that we mention in the guidance is the role that supervisors and the financial institutions, the banks, can play themselves. And we believe really strongly that these players have an important role in supporting financial inclusion by really taking a risk-based approach. In lower risk situations, a digital ID at a lower level of assurance may be perfectly acceptable. And it might be that you need to supplement this with additional risk mitigation measures. It's kind of like the example I kind of previously outlined. But that should allow people to get their first step into the formal financial market, and then help them develop over time a greater footprint, which gives the institution a greater level of confidence about who this person is and how they're transacting. So we hope that with this new technology, that the countries and that financial institutions will be more proactive in actually extending their services to a greater share of the population.
Great, Shana. This is well put. It's especially the statement you mentioned about the creating that first stepping stone, which is frictionless, and that's pretty much what the financial inclusion through digital ID does. And this is great to hear your thoughts as well. And I would like to just go back to the audience and push another poll on where they would bank in the future would be, in the sense proving a digital, ID digitally provides a much better customer experience than having to go and submit documents at physical branches. Do you agree? Yes, no, not sure. Again, I'll give you 1 minute. Less than a minute to actually answer, and we can publish the results before we go towards the closing. Yeah, great. Thanks, Narayan. This is. I'm happy to see that that's the kind of way it's going towards, and I can see the team that's not sure 6.1% is reducing, so it's good. But yeah, I can see some no's in there. Fair enough. But I can see the majority, 91%, is quite happy to do the ID digitally, so that's great. Now, this is the part that I was more excited about, the next part, where I want to ask all you amazing panelists and speakers one question, like a 1 minute quick word about, before I start, all of us are dreamers, right? So what is that one thing, that absolute nirvana for you when it comes to digital banks, from Steve's point, digital IDs, and how it's moving towards, and for Shana, and then the data and the digital onboarding journey for James. Let me start with you, Steve.
I think for me, digital integrity and data integrity and security. I think everything at the moment, as I say, we're in the digital age, and it underpins everything that everybody does. So for me, absolute nirvana will be that confidence that we've got integrity and security around data. Right.
And Shana?
Yeah, so one of the things that was difficult for us in this process is that there is no sort of global digital ID standard. And one of the things I think is an exciting space for digital ID is one day if we can see kind of the cross-recognition of different digital ID solutions to help cross-border transactions to make them happen in a more efficient and in a more secure way. So I think that's an area where we're seeing, hopefully, regulators and also the private sector taking a leading role in developing kind of more convergence between these kind of national assurance frameworks.
Right. Thank you, Shana. Same question for you, James.
Nirvana to me at the moment, Aravind, sounds like a desert island and a white sand beach, but I think you could make a similar analogy with digital identity and building on what Shana just said. The idea of an open, federated, interoperable identity that consumers can use and that they could assert across a range of service providers, I think would be nirvana. It still feels a long way off, but I think there's a lot of great work underway across the industry to move towards that. And I think the other thing for me that's certainly come out of the discussion today is that despite the pandemic and despite the fraud, it's not all doom and gloom. Don't let a good crisis go to waste. I think digital is something that we can run towards as opposed to away from, and it's very clear from some of the comments today that it can help you protect your institution, and also improve consumer experience. And I think the last thing I'd say on that is, I think it's important for those on the call here that are trying to solve for this, ask your current service providers how they can help you, because I think that a number of players, ourselves included, have really been investing to try and make sure that we can help with this kind of stuff and to put data and trusted data where you need it to help improve that consumer experience. So we're going in the right direction, which I think is really encouraging.
Great. Thank you. Thanks, James. That was really good kind of closing. Before I close, we've got another 4 minutes. I would like to take some questions from the audience. I can see a lot of questions coming through. Great. And this has been, a very, very interesting journey for us too. And one of the questions I'm going to ask probably Steve, you be able to take this one. It's about how does digital help the elder and non-tech savvy? Digital going to make life much more difficult for them. Not all want to interact with machines. Further, how can you keep your digital assets safe from hostile cyber attacks? Are your systems robust?
Okay, it's a few there. I think that there's a massive shift in all firms, particularly financial services firms, to do more digitally. As we've heard comment, people have smartphones and apps, and it's very, very much the in thing. It's not for everybody though, and there's very much a focus as well from the regulator on recognising that as well, so that there's pressure from the FCA. And there's people who have vulnerability of some description, which is, quite a complex area, who also, struggle to use various channels, be it digital or telephony. So, us at Think, we do a lot through digital, and we encourage our customers to use it where they can. But by the same token, we have a call centre as well, which, takes a fair number of calls and is there to help service customers. And I think one thing we've learned from it is how, there's a lot of education that we can do and a lot of things we can make things really simple. So, to build that confidence in customers, to use it where they can. But, we recognise it's not for everybody, and it never will be for everybody, and that's sort of where we are as a firm. In terms of the second question around security, yes, the short answer, yes, we are secure. We spend, quite a significant amount of our budget each year on security. And continue to evolve it. We've updated our tooling and how we approach things. I think moving to the cloud, like it is for most firms, is a challenge, and one that you have to be really sort of on your mettle to sort of think about the risks that brings, as well as the problems it solves for you as a business. So yeah, we like anybody else. We're very much strong on security, invest substantial amounts in sort of the people we have, the intellect we have, the training we deliver to colleagues and to customers as well, and also to the tooling that sits behind it that guards us and protects us.
Great. Thank you, Steve. There's a question for Shana in the chat. If a regulator examiner asks you to show you've done a compliance risk assessment on your use of digital ID solutions, what are the key criteria they'll be checking to see that you have covered?
Thanks, Aravind. I can try that one, but you have to check with your national regulator because ultimately they're the ones in charge. You can't say Shana from the FATF said this was okay. I won't let you hold me to it. But I mean, one thing to understand is, I mean, how are you doing that currently for your traditional documentary evidence? Try to use a similar framework in terms of understanding some of the risks and some of the vulnerabilities. I've mentioned some of them. If you can, they're in more detail in our guidance. I mean, but address those straight on and say, you know, obviously every technology presents opportunities, but also presents particular risks. And being honest about them, identifying them, and talking to your regulator about how you're mitigating them in the context of your business, your clients, your products, the regions you're operating in, will give them more confidence that you've really understood this technology and are applying it in a risk-appropriate way.
Great. Thank you, Shana. I can see a lot more questions pouring in, but I think we are on the top of the hour. So, I mean, wow, that was an exciting discussion, and I really loved moderating this, and you guys are amazing panel of speakers. And I've said this before, I'll say it again. The recorded version of this webinar will be available on the 16th of July, Thursday, for those of you who would like to listen to this offline and share. And we will make every attempt to answer all your questions offline and send you that as well. And please, by all means, just take your time and do the survey. And thanks, everybody from every part of the world for listening in, and it's been a real pleasure. And once again, thank you, James, Steve, and Shana, for being an amazing panel of speakers. Thank you, guys. Have a good rest of the day.